Yo, what's good everybody? Welcome back to another video inside of part 8 covering all things price action related. Now, today's video is going to be about top-down analysis and time frame correlation. So what the hell does that even mean? Basically, top-down analysis is starting out on the higher time frames. So some people will start on the monthly, some will start on the weekly. I personally start out on the daily, and all you're doing is you're working through these different time frames, formulating kind of an idea for the trading day. Now I'll start on the daily, drop to the 4-hour, drop to the 1-hour, and then drop to the 15 looking for my entries. And what I'm doing throughout these different time frames is I'm marking my key levels of support and resistance, key levels of market structure. I'm looking for trends, I'm looking for market patterns, candlestick patterns, and then ultimately formulating a if-then plan. And now what an if-then plan is, so basically you're saying, if this happens, then I'll do this. And it's very simple, and I'll show you what that kind of looks like. Now, so I start out on the daily. I grab my horizontal line tool, and I mark my daily levels of support and resistance. Now, I've showed you how to do this in the past support and resistance video. And I mark mine with white, and it signals that these are my very strong daily zones. Once I've marked those, then I simply look at the previous day's candle. So we're going to treat this trade that I took on Tuesday, and I'm just going to kind of bar replay that and show you guys kind of how I approach that. So so Monday's candle closed below this level of daily support and resistance. This shows me kind of two things. One, that there's sellers strong enough to close below a major level of support and resistance. So that means, I'm kind of looking for sells for the day. Not to mention, yeah, sure, we're in a very, very steep bearish trend. But then also what this shows me is that, price has enough sellers to close under this. So if this candle was bullish, if this Monday candle right here, if this had printed bullish, I would be looking for buys going into the day, because this is showing me that, price tried pushing below, buyers entered the market, rejected, and then the next day had enough bullish momentum to continue and print a bullish candle. So then I would be looking for a bullish continuation up into the next level. But instead, we got a bearish candle. So kind of what I'll be looking for is, potentially a pullback into this level of support and resistance to take sells, or just a straight, breakout continuation to the downside, trying to capitalize on the rest of this move to the next support and resistance level. So once I've done that, I know that, based off the daily, I'm looking for sells. Okay, then I drop to the 4-hour, and what I'm doing on the 4-hour, let me skip ahead just so it's like right before London session, so that way it's kind of true to what I would be doing. I believe the next candle, okay. So looking at the 4-hour, anybody with half a brain can look at this and be like, it's pretty bearish, okay? This is the low, this is the push that created it, so we're bearish as long as we stay below this level, which I got a pretty good feeling it'll be several days before we get back up to this level, okay? So we're bearish, I'm looking for sells, I know this. Now, going into this, I know that, like I said, I'm either looking for a pullback and retest of this support and resistance level, or I'm looking for breakout continuations to catch the end of this move right here. Now, being as we already have a massive wick right here, the probabilities are telling me, hey, we're probably not going to, pull back up into this level. So I'm kind of looking for breakout continuations. That's what I see on the 4-hour. I've identified the trend, and I've identified that we have daily bearish momentum. Then I'm going to drop down to the hourly and just kind of skip ahead right before London. Okay, so that's the 1 o'clock. Don't want to go too far. 2 o'clock. Okay, so this is right before London open. Now, looking at this, we know that the hourly is bearish. We had a bearish engulfing right after a massive wick rejection off support and resistance. So I'm kind of looking for, like I said, either if we can get a pullback up into this level, or, I'm looking for a breakout continuation. So then I'm going to drop down to the 15, looking for entries. So what I'm looking for when I drop down to the 15, and now remember, I am an intraday / scalper, so I can capitalize off these intraday moves. So this is 2:45, this is 15 minutes right before London's about to open, or this is the last thing I saw before London opened. So what I had marked out was my key levels. I'm looking for, either price to break below this, I'll get in on the breakout, to capitalize off that 4-hour continuation to finish out that move down into the support and resistance level, or I can wait for price to break above here and capitalize off that pullback. Remember how I said I'm either looking for a breakout continuation to the downside, or I'm looking for a pullback up into this level of support and resistance. Now, why do I have this area marked? It just looks like a good range to me. It looks like, we had some consolidation. Now, if price can get above here, I'll be taking buys. to ride it back up to my 4-hour overall downtrend. I really want to be in sales up here, but I'm not going to, miss out on, this daily move that I could capitalize off this movement. So those are my two things that I'm looking for. Now, I go ahead and I place my, you can place your pending orders, or, you can place, your you can just kind of set your alerts and wait for, price action to get there. Sorry about that. And then, now my strategy, like I've said, multiple times, you want to put your stop loss in a good place. My strategy is built on, probably thousands of trades worth. That's why I have a 10 pip stop loss, just due to my own research and my own trading. This is kind of, what works for me. So with that being said, what I do is I place these orders. I set my alerts. So I'll go in and I'll click, right here, and it'll set an alert. And then I'm just waiting for price to get there. And this is right before the London Open. Okay, so now that I've performed, fully top-down analysis, I have my if-then scenario set up. If price breaks below here, I want to be entering on sells to continue that 4-hour continuation down to the next level. Or if price breaks above, I want to be, buying up into my pullback area, then to look for sells from here. So now I have two different scenarios set up. Now I'm ready for, price to really kind of do whatever it wants to do. So I set my alerts, and I'm just waiting for price to get to my certain areas, or you can be setting pending orders. If you got shit to do, you can set your pending orders, whatever. And you guys are probably wondering, why do I have 10 pip stop losses? Like I said, this is my stop losses, and my strategy is based off of like hundreds, if not thousands of trades worth of data, and I've realized that if price breaks out of my 15-minute ranges, and it wants to pull back into that level or retrace on me, I typically, find out that, roughly, 80% of the time that if it hits more than a 10% retracement, then price just doesn't want to break out for the day, and it's probably going to be a ranging consolidation day. That's why I have a 10 pip stop loss, and it also helps me maximize these risk to reward ratios. So once we're here, we're just going to hit bar replay, and obviously I know this is a winning trade because I literally took this on Tuesday. So, price broke out strongly, and I'm thinking, okay, hell yeah, woo, so yeah, okay, this is cool, right? And price is almost a TP, this is looking good, and then we have a pullback. And now everybody's like, oh my God, the world's, collapsing. But I stay in it because that's my strategy. And then price rolled over and then hit my full take profit. Won to about 7.5 risk to reward. It was pretty cool. But that's literally how I approach every single day. And then the next day, it's the same process over and over and over. You look at the daily to mark your daily support and resistance, 4-hour for your trend, hourly for your trend and potential patterns. And then you drop down to the 15, identify the range that, and then set up your if-then scenarios, and then, just let the market do what it does. That is top-down analysis and time frame correlation. Now, obviously, sometimes I will have different entries, based off of, candlesticks, candlestick patterns, market patterns, so on and so forth. For example, like if this pulls back up into this level and we get a bearish engulfing, then, hey, I'm probably going to be taking those entries, and there's different methods for my entries. But for this example, this is a, kind of consolidation, trend, continuation, breakout. This is, how I would, categorize this trade. And that is top-down analysis and multiple time frame correlation. And how I'm using these different time frame correlations. Remember, we had daily bearish momentum, plus it closed and held under this support and resistance level. And then on the 4-hour, we had a 4-hour bearish trend. We had an hourly retest, an hourly bearish engulfing, which is telling me, hey, if I got in this trade up here, I would be targeting the. So let me show you that, because this probably ain't making no sense. So on the hourly, if you're taking trades on the hourly, now obviously this was not in my trading session, so I did not take this trade. But one thing you could have been looking for on the hourly is once price broke below, here, okay, and we pulled back up into this level, and then we got this bearish engulfing. Okay, let's say you entered right here. Where are you looking to ride this trade out to? Okay, what are you thinking you're going to be doing? Let me delete these zones. Okay, so if you entered off this bearish engulfing on this break and retest of daily support and resistance, right? Which I didn't because it's not in my trading session. You're looking to target this next zone, right? So we can already think, okay, we're looking to target that next zone. Okay, but we didn't get in here. This stuff happened during our session. So what are we looking for is either a breakout continuation to ride this overall hourly move using different time frame correlations. Obviously, we know we have daily bearish momentum, 4-hour bearish trend. We have a, an hourly candlestick pattern, bearish engulfing, and we have a market pattern break and retest. It's all there using all different types of, time frame correlation and multiple time frame correlation. And then, ultimately top-down analysis to set up our if-then scenarios. So then we set up, if price breaks out of here, we are likely to continue down, down into this next level of daily support and resistance following this, overall hourly candlestick pattern, as long as our candlestick pattern and market pattern move. Does that make sense? I hope so. If not, put in the comments what doesn't make sense, and maybe I can make another video on this. I really hope that does make sense. All you're doing is you're just going through these different time frames, getting to your entry time frame, setting up if-then scenarios, and then just trading. Very simple. With that being said, guys, that is it for this video, and I'll see you guys in the next one. Peace.